Well, hello again, everybody. This is John Norris at Trading Perspectives. As always, we have our good friend Sam Clement. Sam, say hello.
John, how are you doing?
I'm doing very well today. I hope you're doing well
Yeah,
today.
it's a good day so far.
So far, so good. And Sam, it seems to be a pretty good time to be an employee or someone looking for employment in the U.S. economy, because earlier this week, the Bureau of Labor Statistics announced, Sam, drumroll, please, the U.S. economy had 10,073,000 job openings. When was that? During the month of June?
Yeah.
That is easily an all-time high. And Sam, it's kind of like one of those situations where you have so many jobs out there. Why? And I hate to ask just a simple question. What gives?
Well, and it seemed like all the headlines around this number were just shockingly negative. And it kind of makes sense at first when you see a headline number like that there's over 10 million unfilled jobs, and there's more unfilled jobs than there are people looking for jobs. And, to me, that isn't necessarily a bad thing. I mean, it seemed like everyone was just extremely negative about this, but we've talked about it, and it's kind of a little better than the alternative. There being less jobs than there are people looking for jobs.
Well, to that end, I think we've all seen the headlines, almost kind of scare tactics type headlines, that some 7.5 million American workers are going to lose padded job benefits come, September 6th, and all that bad news. Well, that's the bad news. 7.5 million people are going to lose pandemic-related employment cushions. But guess what, Sam?
Lots of jobs for them.
There's 10,073,000 jobs that are going wanting right now. And Sam, if you don't mind, if you'll allow me to just kind of break down where some of the job openings are, I think you can see that a lot of them are in probably sort of hourly type work, sort of lower skilled type pay. Out of those 10,073,000, 1,153,000 were in retail trade. You also had leisure and hospitality, had 1,650,000 of those. 1,438,000 were accommodation and food services. That also includes bars. Then finally, we have 1,789,000 job available within professional and business services. But Sam, within those, primarily more towards sort of what they call temp work, business administration to buildings and janitorial work, those types of things. It's not a bunch of CEO jobs that are out there going wanting. So it really does seem to be there's a lot of unskilled, semi-skilled, moderately skilled jobs out there, tons of openings. So with all that out there, all of this hourly work, and some of it going to be decently paid hourly work, if it's all available, Sam, I've got to ask you the question. You're Gen Z, Gen Z. You're a little bit more in tune with all this type of stuff, I think. Why aren't people taking these jobs?
Well, there's still, half the states in this country that are paying those added benefits, and those are rolling off soon. But I think all of this and the areas you listed that have lots of job openings, that just goes hand in hand with the reopening narrative. The jobs that added value throughout the pandemic and didn't lose their jobs, well, there's probably not a lot of openings for them. Those jobs have been filled, and people didn't lose their job in some of those sectors. And if they were looking for the companies were looking for jobs a year ago, they've probably been filled. It's the areas that have been highly impacted that we're typically seeing a ton of these jobs for, and that kind of goes along with the hourly worker. Those are the ones that were typically being shut down, jobs laid off, and that's kind of what we're seeing. But yeah.
Well, I mean, what we're seeing is really kind of more labor market stagnation in some of those areas that have not fully reopened. Not only do you see high levels of job openings, but what you're seeing is lower levels of job hires and lower levels of people quitting their jobs in those areas. So you're certainly seeing a type of stagnation where in those areas across the country that are more fully reopened, we are seeing an increase in the number of job availabilities, but we're also seeing an increased number of hires, an increased number of people quitting their jobs, which suggests one of two things, or probably a combination thereof. When you see people quitting their jobs in higher numbers, it means they feel more comfortable with their potential to get another job. And then that's one. And then two, perhaps there is some element of people looking for just not only another job, but another job at a higher wage, because we have all seen, we'll pay X, we'll pay Y for what previously would have been maybe not minimum wage, but
Close to it.
not far from it.
Yeah.
So you're starting to see. I mean, I went to a fast food joint the other day. I mean, fast food. I mean, I think it was like a Moe's Southwestern or something like that, which is fast food but doesn't feel like fast
Yeah.
food. And I think they were starting people off at 11, $12 an hour and all that stuff. I'm not saying that's a princely wage, but here in Central Alabama, $12 to make my burrito or my taco is a decent wage in
Yeah.
my estimation.
Yep.
And so,
And it makes sense. I mean, nobody's going to quit their job without, like you said, some kind of comfort, some kind of backstop, what it is. I mean, any job, wherever you are in the spectrum, you're not going to quit your job unless you're either retiring, you have another job, or the job is so bad that you're willing to, risk it for a little while. It takes some sort of incentive to be comfortable quitting your job. And the data's kind of backing it up that people are comfortable with this.
Yeah.
You're seeing in the food industry people quitting their jobs at close to a 20-year high right now. I mean, it's gone up for the past 3 months, and that's exactly what you're hitting at, is that these people are comfortable quitting their job because the floor is so high right now of the worst things can get in a lot of these states are, we did the math, and on average about $16 an hour that you can get in some of these states. And so if that's the case, it takes very little discomfort in your job or a part that you don't like in your job to say, you know what, I'll take the $16 an hour, and that could even be a raise for some of these people quitting their jobs. So
that
makes sense.
And that's in some of the poorer states and some of the wealthier states. That number gets up over $20 an hour. So I mean, it's kind of one of those deals that says like, okay, why am I going to sit here and do this when I can make more not by doing anything? That kind of goes, I would say, hand in glove really with what we're seeing with the labor force participation rate. And this is, Sam, I get real nerdy real quick on some of this type of stuff, but the labor force participation rate is that percentage of Americans 25 years of age and older that aren't institutionalized. Sam, and that's a very key thing I got to put out there, that aren't institutionalized, that are actively looking for work in the U.S. economy. And I'm just going to throw some numbers out at you. January 1st of 2020, before the pandemic really hit, 63.4% of Americans were actively participating in the workforce. Then all of a sudden, you remember we had February, March, April, particularly March and April of last year, just got walloped. That number fell from 63.4 down to 60.2. Sam, is decades low in April of 2020. Then all of a sudden started reopening a little bit, and interestingly enough, started seeing some pandemic sweeteners in there, a little PCUA and all that stuff. We saw the unemployment, we saw the labor force participation rate tick up from April of 2020, 60.2%, to August number of 2020, 61.7%.
Yep.
But interestingly enough, Sam, since then we've just kind of
been flat,
bounced around. Even as the number of jobs that we've seen in the U.S. economy as states reopen has surged, we still see about the same number of people actively looking for work, which begs the question, going back to your Econ 101 class, we have a sharp shift out to the right in terms of the supply of work, but apparently the demand for work hasn't budged.
Well,
so what gives?
I think that's one of the long-term kind of consequences that we're going to see as things continue to recover and we get back to more normal times. We've talked before about what's going to happen to children's education, and we're going to see the effects of this for years going forward. And I think this is just another part of it, seeing people that said, you know what, maybe I was going to retire 3-4 years from now, but I'm getting pretty tired of this. Things worked out. I got a little extra bump in pay last year with some of the stimulus. Maybe I go ahead and call it quits. And I think there's a myriad of reasons why people are leaving the labor force, but I think a lot of it, and clearly, aren't coming back. I think a lot of them aren't coming back, and there's still some that aren't coming back because of the added benefits, so hopefully we'll see a little tick up there. But, this is something I think is going to play out over 1, 2, 5, even 10 years. That's going to have an impact on the labor force going forward.
I think a couple other things on top of what you just mentioned is some reasons why maybe some people aren't coming back to work, or I think maybe some of obviously the data's not perfect yet. We probably won't know for a while, but intuitively I would imagine those people 63, 64, 65 who were thinking about retirement anyhow have finally just said, the heck with it. I'm going to retire.
Yeah.
You know, I'm a job uncertainty. I don't want to go to a building with a bunch of people. The stock market's been fantastic. My 401k, my retirement's doing a lot better. All that good or bad stuff as the case may be. I think we're still probably going to see a number of retirements out there. And then also I think there's probably still with a lot of folks, particularly working mothers, truthfully. I mean, I'm not trying to be a misogynist, but primarily with working mothers, there's some daycare insecurity, and not just for pre-K, but also for K through 12, as a lot of states have been reluctant to go back to in-person teaching. That means a lot of parents are sitting there struggling to figure out what to do with their kids during school hours, and that causes a lot of insecurity out there. And how can you have a job when you've got two kids at the house that need someone to watch them, and so you're working for less money than you were paying a babysitter, all that bad stuff.
Right.
So I do think there's an element of that in there as
Absolutely.
well.
Absolutely. And like I said, I mean, the data is not complete yet.
Yeah.
It's not completely clear, but obviously I think you and I are in agreement that there's probably going to be a little tick up in labor force participation rate once we start to get some of these benefits to roll off in some of these other states, but the severity of it is yet to be determined. How many of those people are going to be coming back once we start to see all of these benefits roll off and people really need to start joining the workforce again?
Well, I certainly will think that a lot of folks will probably start joining the workforce. However, I do think, truthfully, Sam, whether it is intentional or not, we have probably seen, thanks to some of this pandemic relief, but then just overall job dissatisfaction and people saying that they're worth. I mean, people proclaiming and living wages and people saying that you're worth something more than you actually are. I think employers are going to have a harder time getting that marginal worker back to work at a wage that's less than $11, $12 here in Alabama, and probably less than $15, $16 per hour in other states.
Right.
And so I think, whether intentional or not, and I'm not a conspiracy theorist, but perhaps there was some method to the madness for all this type of stuff, increasing the hourly rate by just increasing benefits, and then people get used to it and saying, I'm not going back.
Yeah.
And this isn't every job, but I'm not going back to putting frozen potatoes and chicken nuggets in grease for $8.50 an hour.
Well, and we've talked about it before. In economic terms, wages are pretty sticky. It's hard to get wages to move both upwards and downwards. I mean, we've seen it for decades now. Productivity's gone up, and wages really didn't go up step for step with the increase in productivity. Yeah. And now we're going to kind of maybe see it going the other way. People that are worth, like you said, $8-9 an hour, jobs that are worth that. It's kind of hard to get people to say, you know what, I understand. I'll go back down to $9 an hour from 15 an hour.
Yeah. Because I mean,
cut my wage and
well, because the mindset is there. I'm worth this.
Yeah.
I'm making this by not doing anything. Why would I go work for you? Even if their benefit decreases, people get used to that. And they start believing that's the value of their output, as opposed to understanding that the value is oftentimes not in the individual's output, but in the seat that they occupy in the economy. And the seat that they occupy in the economy might be throwing, again, chicken nuggets into boiling grease, and that seat pays $8.50.
Yeah.
It doesn't matter who you are, that seat pays $8.59 an hour. So I would say unintentionally some of these benefits might be distorting workers' views of the true value of their economic output, which I think is detrimental long term. And then on top of that, if I'm an employer at, say, a fast food restaurant or a bar, I mean, that's where a lot of these jobs are, I'm sitting there thinking, okay, well, if I can't get anyone to work for the value of for how much I value that seat, let's say it's $9-10 an hour, then if I can't get anyone to work for that, you know what I'm doing, Sam? I'm not going out of business. I'm doing something else. And you know what I'm doing?
What?
I am using technology to take care of the output gap.
Yeah.
And so, you have already seen them. If you live in San Francisco, you're listening to this. If you're living in New York and you're listening to this, you already know a lot about self-service kiosk in a lot of your fast food and fast casual restaurants, or you're just used to it. However, if you go through enormous portions of the country, the flyover, if you will, in a lot of areas, you don't see as many of those. You don't see a lot of self-service kiosks here in Birmingham, Alabama. You don't see them in less densely populated areas. You don't even see them in even more prosperous southern cities because the clearing price for unskilled labor just isn't $15. It's not $14. It's not $12. It's closer to $11, $10, and for those jobs, it's closer to $9. So that's where the franchisees, the business owners, the restaurant owners just simply aren't going to go, okay, I guess I've got to pay you more now.
Yeah, I mean, in economic terms, we've raised the price floor of labor, which causes supply and demand issues. But in real terms, we kind of talked about it, but the price floor is the negotiating point. That's the initial negotiating point right now. Yeah. Is the real world version of what that price floor is. And at some point, if that kind of stays there, investing in technology, investing in robots, whatever you want to call it, starts to pay off a little more. And long term, robots don't need health insurance. Robots don't need a lot of the benefits that you pay people to take orders and what have you. And it's going to be a trend. As the cost of technology goes down. Yeah. And wages continue to go up in some of the less value add part of the economy, you're going to see more and more of it.
As an aside, and Sam, we might be in danger of running a little bit long at some point here today. When you're talking about robots, you're not talking about what people of a certain age would think of as a robot danger, like Will Robinson or R2D2 or C3PO.
R2D2. Maybe.
Danger, Will Robinson or Electro or something like that. What you're really talking about is artificial intelligence, self-service kiosks, technology that replaces the human element in a particular function.
Yeah, I think you're going to get to a point where a true sit-down meal, one where you sit down, someone refills your drink, writes your order down, comes and checks on you. I think that is going to continue to become kind of more and more of a luxury. People are going to have to start expecting to go pay more for that kind of experience than they are right now because, I think a lot of those jobs are going to get priced out of the market.
Well, I think you're already seeing that with a lot of the closures, at least in our area, of some of what they would call fern bars or something like that. So sort of upscale, fast casual. Certain elements, certain companies, which shall remain nameless here because I don't want to go through all the caveats, but I think that element's going to struggle. But going back to sort of the job at hand or the discussion at hand, 10,073,000 job openings. Labor force participation rate for July of 2021, 61.7%, exactly where it was in August of last year, 11, 12 months ago. Despite reopenings, despite all this stuff, there is a mismatch there, and the reason why Americans aren't coming back to work is because I would say they don't feel like going back to work at the wages that a lot of these jobs are willing to pay.
Yeah.
And so that mismatch is going to get absolved one way or the other. Either people are going to be willing to work for less than what they currently think the value of their output is, or businesses are going to start figuring out a way to get that capacity without hiring a bunch of full-time employees. And so as a result, that gap will shrink at some point.
Yeah.
If the labor force participation rate doesn't increase, so the number of jobs available will shrink. However, let's go back to another point that we talked about, and that is this a bad thing to have this number of jobs open?
I say no. I say pretty adamantly no. That's why I was so kind of shocked at people's reaction to this. And I guess, you sell more umbrellas when it's raining, but oh my gosh, there's so many jobs available. It's really it. There's so many jobs available. There's so many companies still willing to invest into employees right now, even at some of these elevated levels. There's a lot of people comfortable with that. And you've seen some companies, go out and already say we're going to set our own minimum wage at 15 or what have you. And having this many jobs available is a positive thing to me. I think it's another sign of the reopening. I think the fact that people are doing this and not saying, we're going to really try and slash the amount of employees we have, that some of the fears that we have, and I think rightfully so have these fears, aren't really showing themselves fully in the market yet, that people are still willing to go out and invest in human capital.
I think you're absolutely right. 100% nail on the head, all that good stuff, because having more job openings is always going to be preferable to having fewer job openings. Everything you said about the business owners looking to invest in people and looking to kind of get back at it and let's reopen and let's get after it. We fill all those jobs. We make up more than the number of jobs that we lost last year. The big question is, so economically speaking, I think it's a wonderful thing that we have this number of jobs being created because it suggests confidence in the U.S. economy, in my estimation. However, societally, I think it's a real big question mark. Why are all these jobs available? Why aren't people willing to take them? And I say if there's going to be that type of mismatch, then there's got to be some artificial things going on here which are distorting the picture. And I would say, again, going back to the pandemic-related sweeteners and unemployment insurance.
And I think it's going to work itself out. I think at the end of the day, that's why I guess, take a big positive away from this, is that I do feel like it's going to work itself out. As a lot of these benefits roll off, we're going to start to see people, that mismatch, start to weaken, and people start to fill some of those jobs. And so, I mean, it is something that makes me excited about the U.S. economy going forward.
Well, I think we've got a number of quarters ahead of us with a bunch of good news. I think you're absolutely right with that. As is always the case, as Pogo, the cartoon character, was famed for saying, I've seen the enemy and he is us. We stand in our own way of a vibrant economic future. And if we can just keep ourselves on the sidelines in a lot of ways and keep ourselves from doing something stupid, the future of the U.S. economy is incredibly bright, as is evidence in my estimation of having almost 10.1 million jobs available. Put that number into perspective. That is double the entire population of the state of Alabama, where we are located. Every man, woman, and child, we have double the number of jobs out there available to be had, if only you want to have them.
Yep.
All right. Well, guys, we always like to hear from you. Also, if you have any comments, positive or negative, please let us know. You can always reach us at tradingperspectives@oakworth.com, or you can leave us a review on the podcast outlet of your choice. As always, if you're interested in reading more or hearing more of what we have to say or how we think, you can always go to oakworth.com and look underneath the Thought Leadership tab for all kinds of good information. All right, Sam, one last chance to woo the world or just show just how brilliant you are.
That is all I have today.
And that's all I've got today, too. Y'all take care.